The market is the muscle memory, right? A lot of people don't understand this, and they might have heard about this. When you talk about markets having muscle memory, like in a suburb where the house price was before the market plateaued or the market fell, right? Everyone in the neighborhood knows. I remember around the corner, the house sold for $1.6 million. And so I know that back in my head that, someone would come in and offer the same price when the conditions are right and the sentiments are right? So market has that muscle memory. And, people who've been actively looking in the area, they know that this is where the market was, right? And so they come in bringing in emotions, especially owner-occupiers bringing in emotions to drive the market to that point quite quickly. So from an owner's perspective and from an investor's perspective, a rate cut on the horizon means that people who are on the fence, they'll invest hard. They'll invest fast and they'll invest hard. One of the lead indicators that we follow is just over the last month, the investor lending has gone up by 35%. Just in the last month, right? Investor lending has gone through the roof. And now this is just an indicator of people seeking approvals, right? And so lending approvals are the best indicator of you knowing where the market is going to head, right?
Yes.
And such a sharp jump at 35% lending is basically saying that people are gearing towards becoming ready for the market to basically go up or the interest rates to go down and the market to go up. And I always say this, you can never pick a peak and you can never pick a bottom. And so as a smart investor, you should always jump into the market before it's at the lowest, like the lowest. Come out when you know that, there might be still another 5% growth in there. Just come out, right? If you are, trading in property market. But a lot of people don't do that. They become really greedy or they become really anxious and they're like, oh, the market is going to drop more and I'm going to wait around the corner. And then the rate drop happens and then you miss out an opportunity. I've seen markets growing by $10,000 to $12,000 to $15,000 a week. And people who have smaller budgets, because again, the rates are not falling fast. And so you don't have a lot of servicing available. You might only have a servicing or a purchase price of, $450. And you would be priced out of a particular market that you're looking at very, very quickly. You would be kicked out of the market and then you'll go out there trying to find a new market. And while you're finding the new market, other people who've been sitting on that market, they push the prices out of that market too, right? And so you consistently miss out on the market till you're basically priced out for 6 months or 8 months in a year. And that's what the scenario is. FOMO, you're missing out or you're overpaying on some of these properties because you're buying a wrong product because you're just trying to get into the market. So all of these sentiments play its part at the same time. And so as an astute investor, you need to understand that you would have a lot of opportunistic investors who have done this time and time again. People like us who are waiting for this and we were like, I've made my best money in times like this and I'll acquire and I'll sit on this because I know the market is about to turn. And then you would have, safe players in the market who would be like, I'm going to wait to see that rate cut. I'm going to wait to see what happens. And, you miss out on the market.
Yeah, that's right. And doesn't mean that it's the end of the world, right? But it is going to be, you're going to have to pay a bit more of a premium.
Of course.
Are you okay with that? Just because everyone's risk tolerance is going to be a bit different. If you're going to be a bit more risk averse and you want to get some certainty, then be aware that that's going to cost you a bit more to purchase in.
Definitely.
And you're going to have more competition to deal with. Yeah. So, and if you're okay with that and that satisfies your anxiety levels or, like I said, your risk tolerance, then it's a decision that you make. But ultimately, it's around understanding where we are in the market right now, what the certain data points are, what the market is saying and what the trends are saying, and making a call. And making a call, whatever that call might be, it's taking some sort of action. And as we always say, bring in your advisors to be able to it's how much borrowing capacity do I have? What's happening to your broker? Understand, because your broker is going to be able to understand what's happening with the lenders right now, how long that's going to take. Your accountant, obviously your property advisor as well. Start to get these people in place to really help you start to move forward.